Welcome back. Let's get the implied open up on the screen because Asian markets are actually not too bad. The Hong Kong market was down. It's also turned a little positive now. There we go, about 40 points higher. That's the expected start at least. But let's talk about the individual stocks that are going to be in focus as well, and several names on our list this morning. We'll start off, of course, with this big news that came in on steel, and joining in live from the mountains to demystify what the safeguard duty could mean for the sector is none other than our very own Nigel D'Souza. Can we see Nigel, please? He's been a big sport. There we go. That's a nice look, Nigel. Quite liking that. I mean, we could get used to it. But yeah, thank you for joining in.
well, I expected this news to come before I left, but be that as it may, it came in around midnight last night. The DGTR has recommended that close to around 12% safeguard duty on all imports that are coming in on HRC. This is important, but keep in mind this needs to be notified by the Finance Ministry as well, which most sell-side analysts don't believe it's going to be a bit of a challenge on that front. So for the time being, it's the DGTR that's proposed it. And in fact, we'll be waiting for the Finance Ministry to go ahead and approve it. Few points to note out here. One is the industry, they were rallying for around 20 to around 25% safeguard duty. But the realistic assumption was that you'll get close to around 10 to around 15%. In anticipation of this news, you've seen that steel prices have moved up by around 2,500 rupees per ton, or around 5% in the last 1 month or so. Now, with this 12% safeguard duty, they have some headroom to go ahead and increase prices further. Keep in mind that domestic flat steel prices are already at a premium in comparison to imported steel, though there could be some headroom out there. What's positive, though, is that this price hike that they've taken, that sticks, and that directly flows down to the EBITDA per ton. As it is, we know that coking coal costs have come down, so it'll be a dual benefit for them. Q3 FY25, in all likelihood, the EBITDA per ton for all these steel majors, they have bottomed out, and things will look up from here on, which is positive. Philip Capital, they have come out with the note, and they say in terms of pecking order, SAIL is the one that they believe is the most benefited, followed by JSW Steel and Tata Steel. There'll be a rub-off effect, though, on the entire value chain. So good news coming in for the steel companies, but keep in mind, they've been outperforming and anticipating this piece of news to come in there. Green on all these names. Back to you guys.
All right, Nigel, thank you so much for that. Green on steel companies and a lot of green around you in the mountains as well. Wish you happy holidays. See you soon on Monday as well. For now, we'll keep an eye out on all the metal names. Like Nigel pointed out, this was anticipated, but again, it is a positive news nevertheless. The other stock on our radar is Pidilite. They held the analyst meet yesterday. A lot of things that they've spoken about. One was them investing in capacity building, launching a new range of interior decorative paints under the brand Haisha, because all the paint companies are going into adhesives. Why not an adhesive company go into paints as well? Significant improvement in underlying volume growth and profitability in the last 9 months. And they've gotten some technology partnerships for new applications in leather goods and electronics. The focus of Pidilite, pretty clear. If two things can be stuck together, they will look for solutions, literally and figuratively, to do that as well. They've defined their business, core, growth and pioneer, where pioneer categories are expected to do about 100 crore revenue in 3 years of launch itself. What is most interesting is the growth that they expect in tile adhesives. Remember, 80% of tiles in the country right now are stuck using cement. Could there be an adhesive solution for that? They believe it's a market worth nearly 25 to 3,000 crores itself. And other growth opportunities that they spoke about: wood joineries, professional solutions for large projects, adhesives for electronics, and growth in international markets as well. Basically, chasing all-round growth with double-digit volume growth and the 20 to 24% EBITDA margin target. Expect Pidilite to see green on the back of these takeaways from the analyst meet.
All right, well, so we'll keep an eye out on this one. But Westlife is the next one?
Westlife is the next one. There is a leadership change succession, so to say, where Akshay Jatia, who's presently an executive director, has been elevated as the CEO. Akshay has succeeded Amit Jatia as the key managerial person in the company as well. And we've had a word with Akshay a couple of times on our channel as well. I mean, a young guy, smart guy, and obviously has experience of working in the business itself. And all the quick service restaurants are in focus in any way on account of demand tailwinds. So new leadership coming in from the family, a blend of the old and the new, should be good.
Amit was fairly young himself, right? I mean, was this anticipated by the street? Just quickly, 10 seconds.
He looked a lot younger than he was.
Oh, like that. Okay, that explains it. Speaking of management changes or management continuity, let's talk about Bajaj Auto, because that's where there is continuity. Mr. Rajiv Bajaj for another 5 years. So Darshan, good morning.
Good morning, Survi. So before I talk about Bajaj Auto, for the entire auto pack, this DGTR recommending 12% safeguard duty on import of steel may be a minor negative. But now coming to the Bajaj Auto has made two announcements. First, Bajaj Auto has reappointed Rajiv Nayan Rahul Kumar Bajaj, or by the name that we know, that Rajiv Bajaj, as MD and CEO for another 5 years, and that would be effective April 1, 2025 to March 31st, 2030. It would be subject to shareholder approval as well. Another announcement that company has made, that Bajaj Auto board has decided that company will be making additional infusion of 1,500 crore in its NBFC arm, that is Bajaj Auto Credit. That would be made in FY26 in a phased manner. This infusion is important considering over the last few months, not only the analysts, our companies have been flagging issues related to financing of vehicles. So this infusion is important. So that's the reason I'm going with green for Bajaj Auto on the back of these two announcements.
All right, so thank you very much for that. Well, let's talk about more stocks with news flow. Vamakshi is here with details. Vamakshi.
Good morning, Prashant. Let me first start off with GR Infraprojects. The stock is expected to open higher after it has received a letter of acceptance from the NHAI. This is for construction of Agra-Gwalior Greenfield Road, and the estimated project cost stands at 4,263 crores. The next stock on my radar is Zydus Lifesciences, going with the green for this one as well, because they've received the final approval from the US FDA to manufacture apalutamide tablets. These tablets are used to treat patients with metastatic castration-sensitive prostate cancer, and they have had an annual sales of almost $1,100 million in the US markets as per IQVIA data. Apart from that, keep an eye out on Juniper Hotels as well, and that is because they've executed a share purchase agreement with Jenipro Hotels. They will be developing a 5-star hotel on the Kaziranga land in Assam. So going with the green for discount on the back of this development. And lastly, keep an eye out on Nazara Technologies. They've acquired a close to 9% stake in Absolute Sports for nearly 69 crores, and with this the shareholding in Absolute has now increased to 100%, making it a wholly owned subsidiary of Nazara Technologies. So going with the green for this counter as well.
Okay, all right, got it. Vamakshi, thank you very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them: SAIL, JSW, Tata Steel, Pidilite, Westlife Food, Bajaj Auto, GR Infra, Zydus Life, Juniper Hotels and Nazara Tech. There's actually no stock, like we've been telling you, on the red side of the screen today, so plenty of good news coming in. That's equities. Now let's figure out what's happening with commodities. We have Manisha joining in with the latest action. Manisha, I mean, on geopolitics, lots of varying news points, right? Slightly good on the Russia-Ukraine deal, but then Middle East, there's still all kinds of issues.
Oh, well, absolutely. And, let's not forget the trade tariff impacts on economies as well. And when you look at all of these, well, the gold prices only seem to be looking at the safe haven buying amongst all of this. Actually, when you look at various asset classes, gold is the only safe haven right now, because you've seen dollar continue to decline. Various other currencies like Japanese yen or Swiss franc, which used to be safe havens as well, are not doing so well. So gold absolutely basking in that glory. And we've seen $3,038 an ounce of an all-time high in the New York session overnight. Overall, in the metals as a sector as well, it has been going good because the markets are anticipating more stimulus measures coming in from China that could boost demand expectations. So you still have copper prices making a new 10-month highs in the overnight market. What also has been running up really has been the raw sugar prices in the international markets. It's trading at a 1-month highs right now. We are looking at a lower sugar output in India, lower sugar output also in Thailand and Brazil. So while the international prices are running, so are the Indian stocks as well. So sugar is going to be an important one to watch out for as well.
All right, Manisha, thank you very much for that. So a lot going on in commodities as well. But of course, tariffs are the big unknown, as Citi's regional economist also pointed out. We'll take a quick commercial break here. We'll be joined by Devin Choksi of DR Choksi FinServe. Stock-specific chat coming up.